Dividend investing is a solid way to generate passive income. However, if you plan to earn thousands in dividends each month, you need to understand what it actually takes to make that happen. So in this video, we're going to look at different ways to generate passive income with dividend investing and break down exactly how much you need to invest to reach £1,000 per month. Let's start with the first type of investor, the lower risk diversified dividend investor. There are many options in the ETF space, but a notable one is the Nasdaq 100 covered call ETF, or QYLP. This ETF is very unique because it gives you a way to invest in large popular US companies while also adding a strategy to earn extra income. Here is how it works. The ETF holds a collection of stocks from big, well-known companies across different industries. But instead of just holding these stocks, it also uses a strategy called covered call, where it makes extra money by selling the right for others to buy some of its stocks at a set price. This brings in regular income for the fund, but it also means that if the stock prices jump up a lot, the fund won't benefit from the full rise. So you get steady income, but with a trade-off. Limited gains if the stock prices increase quickly. At the moment, this fund's share price is £13.4 per share and provides an impressive dividend yield of 11.10%, which is paid monthly. However, as UK investors, we need to account for the 15% withholding tax on US dividends. So to earn £1,000 per month after accounting for this tax, you would need approximately 9,497 shares of this fund, which would require an investment of approximately £127,233. Now let me quickly explain how I work this out. This fund has a 11.10% dividend yield, which means that for every £100 you invest, you will earn £11.10 per year in dividends. For UK investors, however, as we discussed, a 15% dividend withholding tax applies. So the effective yield after tax is 9.4%. Now with the ETF's shares priced at £13.4, a 9.4% yield means each share pays about £1.26 per year in dividends. So this means you will need about 9,497 shares to hit about £12,000 per year, or £1,000 per month. Therefore, buying 9,497 shares at £13.4 per share will require an investment of approximately £127,233 to achieve the £1,000 monthly goal. Of course, for this example, we assume you have this amount invested in a stocks and shares ISA, meaning you wouldn't pay any tax on dividends, except for the dividend withholding tax, which isn't covered by the ISA. Therefore, as you can see, earning £1,000 per month in dividends from this ETF is certainly achievable, but it requires a substantial investment, which may be out of reach for most people. Now, although the high yield of this fund is appealing, there are two drawbacks to consider. The first is the high expense ratio. At 0.45%, you would pay £45 in fees for every £10,000 invested, which can add up over time and potentially reduce long-term returns. The second drawback is the ETF's long-term capital performance. For an idea of long-term performance, we can look at the equivalent version of this fund, with the ticker symbol QYLD, which trades on the Nasdaq. As you can see, the fund is down over 25% over the past 11 years, which may offset the appeal of high monthly payouts if capital preservation is important to you. This being said, there are other high dividend ETFs worth considering, although they may not pay dividends monthly, and their dividend yield is not as high. Options like the Vanguard FTSE All World High Dividend Yield ETF, the SPDR UK Dividend Aristocrats ETF, and the iShares FTSE 100 Distribution Fund could be alternatives to explore, especially for those who prioritize capital growth alongside dividend income. Here is a table that shows you how much you would need to invest in each of these funds to earn £1,000 per month. Given their much lower dividend yields, you would need to invest a significantly larger amount of money. So these are just a few examples to give you an idea of what it actually takes to earn a decent monthly passive income by investing in dividend funds. Now, for higher risk investors who prefer picking individual stocks for dividends, the approach is quite different. But before we jump into the next section of the video, do me a favor and hit that subscribe button. Thank you. It's worth noting that dividends are usually paid quarterly or biannually. So if you're aiming for £1,000 per month in regular income, you will need to make sure your portfolio includes stocks that pay dividends every month. That's why I've put together a list of UK and US stocks that pay dividends in different months, giving you an example of how to generate monthly income from dividends while keeping your portfolio fairly diversified. Just keep in mind though that this isn't financial advice, so make sure you do your own research before investing in any of these stocks. For January, April, July and October, we have GlaxoSmithKline, a UK stock with a dividend yield of 4.37%, PepsiCo at 3.30%, Altria at 7.57%, and Coca-Cola at 3.07%. The latter three are all US stocks. To receive a monthly income of £1,000 from all these stocks combined, we will assume you earn £250 from each of them per quarter. However, as mentioned earlier, we also need to take into account the 15% dividend withholding tax that UK investors are charged on US dividends. So taking everything into account, you will need to invest £22,848 in GlaxoSmithKline, £35,538 in PepsiCo, £15,601 in Altria, and £38,267 in Coca-Cola. Overall, you would need to invest £112,254 across these four stocks to receive £1,000 in dividends in January, April, July and October. For February, May, August and November, we have British American Tobacco with a yield of 8.56%, AbbVie at 3.79%, Starbucks at 2.47%, and Caterpillar at 1.44%. To earn £1,000 per month from these stocks, while factoring in the dividend withholding tax for the US stocks, you will need to invest £11,688 in British American Tobacco, £31,007 in AbbVie, £47,598 in Starbucks, and £81,662 in Caterpillar. So you will need to have £171,955 invested across all these stocks to generate £1,000 in dividends in February, May, August and November. Finally, for March, June, September and December, we have Unilever with a dividend yield of 3.25%, Chevron at 4.19%, Imperial Brands at 6.43%, and BP at 6.20%. To earn £1,000 per month from these stocks, you will need to invest £30,769 in Unilever, £28,030 in Chevron, £15,577 in Imperial Brands, and $16,129 in BP. Overall, the investment required across these four stocks to generate £1,000 in March, June, September and December is £90,505. So to earn £1,000 in passive income every month, you will need a total investment of £374,740 across these 12 dividend-paying stocks. That's quite a hefty amount to invest. You might be wondering why I picked some of these stocks, especially since they offer such a low yield. Well, the reason is that they've all had strong dividend safety scores over time, along with solid payout ratios and long dividend streaks. Even though their yields might be lower compared to others, they're still quality companies. Sure, you can find stocks with higher yields, but their fundamentals might not be as strong. Therefore, earning £1,000 a month in dividends is definitely possible, but it requires a substantial investment. That's why dividend investing tends to work best for those who have been at it for 20 to 30 years or more and have built up a decent amount of capital. Don't get me wrong, there are younger investors who are incredibly wealthy and can afford to invest large sums to live off dividends. But for most of us, focusing on growth-oriented investments to build wealth might be a better approach. Personally, I don't invest in dividend products because I focus on capital appreciation. But here's the thing, for many, investing for dividends works, because it keeps them in the game even when the stock market crashes. Seeing those dividends coming in gives them something tangible and helps them stay invested longer. It has a psychological effect. Now, with so many dividend-paying stocks out there, picking the right ones can be overwhelming. So to help you sort the good from the bad, Here is a sort of hierarchy. At the top, you've got dividend kings. These are companies that have been paying and increasing their dividends for 50 years. And then you've got dividend aristocrats, which have been paying and increasing dividends for 25 years. So if you're looking to invest for dividend income, keep an eye out for those. And in the meantime, check out this video to learn about 7 things many people get wrong about investing. See you there.